Good morning, everyone, and welcome to Republic's Bank's Homeowner's Guide to Securing a Mortgage. I am Lisa Knight Williams, Marketing Officer, Products and Services at Republic Bank. Welcome once again. Unfortunately, at this time, Mr. Jordan is experiencing some issues with his microphone and video, but he will join us along the way. We would like you to add any questions you may have to our chat box during the session, and we will answer them afterwards. So on our panel today, we have Mr. Carlos Beckles, Retail Services Manager with over 10 years experience. We have Mr. Ron Clark from Managing Director, Ron Clark Realty, with over 40 years experience in the business. And Mr. Stephen Jordan, who will join us, who has over 24 years in the business. So good morning, gentlemen. Let's start our discussion today about what is a mortgage. So I'll ask Carlos first, what is a mortgage?
Generally speaking, a mortgage is really just an agreement between the bank, a borrower, and a lender in terms of a purchase of a property. You can also use the same property and the value in the property to borrow again. So just in simplistic terms, it's really just an agreement between a borrower and a lender in relation to a property.
So Carlos, we know what a mortgage is. And now we know what a mortgage is, why should we have a budget at this time when we're now looking for a mortgage? Why should we start off with a budget and not at the end?
Okay, if you're doing a loan by yourself or you're doing it with a partner, you need to budget. Budgeting is essential because you plan your expenses so that you are on track. So what you can do is you come up with an amount that you can pay monthly, because a mortgage is a long-term investment. You'll be paying a mortgage for, I guess, 30 years or so. So it's going to be for the large portion of your working life. So you come up with a payment that is manageable between you and your partner so that you can continue to pay. You also need to consider any side hustles. So if it is that you rent a property, you need to consider that when you're trying to come up with a budget. Any type of passive income. So shares, any dividends that you are paid, as I mentioned, rental income, or if you have a second job, those are things that you would consider when you are trying to come up with your budget. You also need to budget savings. Savings is very important because, as you know, the grandmother would say, put on some money for a rainy day. So you also need to budget how much you would save. And you also need to budget for property insurance and property taxes. Property insurance is important because if the house is adequately protected in the event of some unforeseen circumstance, you'll be able to call on the policy to put back the building where it was before the unfortunate circumstance. So there are a number of things you need to consider, as I mentioned. So you need to consider what is a manageable payment for you and your partner. You need to consider your income, your income, side hustles, any passive income that you're getting. Consider savings and property taxes and income and insurance on the property.
Okay, great. So I sit down. If I have a partner, I join with my partner, and I decide what we can afford. So we budget what we think we are able to afford if we want to get a mortgage and get this lovely dream home that we've been discussing forever. Exactly. So in terms of, so we would know what we can afford. So how do we get to what we qualify for? Can you explain what it is, what I would need to do in order to qualify?
Well, you will come to your lender, you will go to a lender, and in this process, all borrowers need to be upfront and transparent. As long as you're transparent, the sales officer or whoever you're speaking with will be able to adequately advise you how to move forward. So you just need to be transparent. If it is you have a debt that is going bad or a debt that you would like to get paid, you just mention it, and the sales officer will be able to advise you accordingly. So you need to be transparent and upfront. That's what we expect from you as a borrower. From the lender, what you can expect from us is understanding. We know everybody's situation is different. We know that some people have certain challenges, others might not. So we're sympathetic to those challenges. We also will thoroughly explain the process. So some people are a little daunted by a mortgage process because it's a large investment. There's nothing to be afraid about. It's unnecessary. Everybody gets mortgage. So we thoroughly explain the process so that you're comfortable, and the last thing is that you're confident you're dealing with trained staff. And we need to choose an institution, a lender, where the officers are adequately trained, that they can be able to advise you accordingly moving forward with the mortgage, right? So that's what we expect of you and what you should expect from your lender.
Ron, in your experience from doing this business for over 40 years, at this stage, after I've had my budget and I know what I can afford, do you agree with me going to find out what I can qualify for so early? Because I have this thought of the type of home I want. So don't I just look for the home that I want?
Well, yes, you can look for the home that you want if it's tempered with reality. I think definitely it's important to choose a lender who you can communicate with in a comfortable fashion, and seek their advice on what is a realistic budget based on your income and expenses. It helps to avoid any frustration. It also helps you, as well as the agent that you choose to work with, serve you better. So yes, I think it is a very important first step to all of that. Most people tend to look around a little bit, whether it's on Facebook or websites or various other mediums, but it is always a very good choice to seek advice from a qualified lender, to give you a guideline. There's nothing wrong with dreaming, so long as it's so long as it has a little bit of reality. So long as it has a little reality with it. You know, you may choose to wait another year until you get that raise that you've been working so hard for. You may choose, you and your partner, wife. It's a very nice journey, but you should make sure that you are well equipped to go on that journey.
Okay, so we just want to welcome Stephen, Mr. Jordan. We seem to be still having some challenges with his audio, so we'll try again there. So we know what a mortgage is. We know how to budget and what we can afford. We've gone to Carlos. Ron agrees with us. We've gone to our lender to figure out what we can qualify for. So how, Carlos, if you can explain the process a little bit more in terms of qualifying. How do I reach the bank? First things first, because it's COVID time. Do I visit? What happens there? So now I'm trying to understand more. How do I qualify? Let's get into that a little deeper.
Well, as you said, it's COVID, so we want to limit the amount of interactions that we have. So, and it's easy for you too, because I mean, in 2020, you could literally apply for a mortgage from the comfort of your own home, and Republic Bank facilitates that. You can email all of the information. We will be able to advise you accordingly. And really and truly, the only time they have to come into the bank is when you are signing off on the mortgage. So, and that's pretty fantastic. So at Republic Bank, we make it easy for you to get a mortgage. So you can always email us at info@republicbarbados.com. You can always go on our website. There's an application form there that you can fill out. That's at republicbarbados.com. You can also reach us on Skype, which is republicloans.bb, and on Facebook, which is Republic Barbados. So it's really easy to get in contact with us, and you could always call us on our trunk line, which is 227-2700. Now, after you have gotten in contact with us, it is really just to get to the meat of the matter, how much you would qualify for. So sometimes you will hear loans officers throwing around some words like TDSR or total debt service ratio. There's nothing to be scared about. It's a really simple acronym, and it just stands for total debt service ratio. Your total debt service ratio really is just a calculation that's used when you want to borrow money. It just says how much you qualify for, a good balance between your gross income and how much can go towards your debt. Generally speaking, lenders use from about 33% to 50% to calculate your TDSR ratio. For the purposes of our discussion, we will go with 40%. That's going to be our golden number, 40%. So say, for example, you have a monthly income of $1,000. Using the golden number of 40%, generally speaking, your total debt should not exceed more than 40% of your gross salary. So that's $400. So that $400 will be comprised of any loans that you have, any alimony, court-appointed child maintenance, credit card debt, car payments, any debt like that, not bills, the utility bills, but any consumer debt would go towards that $400 number, right? So
that would include if I have something from a furniture store, anything like that.
Hire purchase would be included. That is consumer debt also. So those are the things you have to consider. So as I said, you need to be transparent. So any hire purchase that you have, you just be upfront with your loans officer, and they will be able to calculate your ratio. So generally speaking, people, if when you're coming for a mortgage, say that, for example, using the same $1,000 a month, you have debt totaling $100 a month, then you have $300 available to service debt. And on that basis, we would calculate the value of property that you'll be able to qualify for. And then you would issue with something called a mortgage certificate. The mortgage certificate then is just a sheet of paper. It says, Lisa Knight, you are qualified for $1 million. And you can take that to Ron, and Ron is going to find you a nice property in St. Philip in order to purchase. All right?
Great. So Ron, this mortgage certificate really assists you. How does it assist you in helping me to find the home that I can live with my family and make all my dreams come true?
Well, when you hopefully will find a piece of land or a house that you like after you approach an agent and you want to make an offer, if the agent is able to show the vendor, the current owners, that you actually have a mortgage certificate showing that this is what you qualify for, it puts you at least one step ahead of people who don't have one. It shows a seriousness and a genuine desire on your part to move forward with your process. So you have already taken step one. Step two, of course, is to find the agent that you're comfortable working with and them assisting you as best they can to find your dream property. Having a mortgage actually is quite a responsible situation. As I wanted to add on to something to what Carlos said before. Being able to put down a few dollars every month and create savings is important. But please remember that whenever you buy a property, that is, I wouldn't call it enforced savings, but it's very sensible, because at the end of the day, you have used your savings to live in. If you buy a house from someone and you're living in it, not only, unlike when you put it in a bank or if you put it in stocks or whatever investment you choose, you have to wait for a return on that. But when you buy a house, the moment that you step through those doors and you take those keys, your return starts.
True.
So you are gaining from day one. Generally speaking, the value of the house will appreciate, and you are actually utilizing that asset to live and enjoy your life together, hopefully with your family. So there are major benefits to owning your own property or trying to own.
Excellent.
What I wanted to add though is, after you have the mortgage certificate and you go to Ron, and he shows you a few properties, it might not be the type property that you might want. So sometimes people just have to maybe wait a few years, maybe 2 years, to work down their debt capacity, their debt load, so that they'll be able to qualify for more. And there are a number of ways that you can be able to improve your debt service capacity ratio, or your debt load. You could either, if you have some assets, maybe you might have a car that you can sell, use the money to repay some of the debt, which would improve your TDSR calculation. Or maybe you might want to refinance a loan that you might have. Republic Bank has some very fantastic rates. So you can take the loan, refinance it, extend the tenor, get a lower interest rate, and then you'll be able to improve your debt load, your debt ratio, so that you would be able to qualify for more and probably get the type house that you might have been dreaming of for the whole of your life, right?
So that is if I am adamant that I want that type of house. But in the event that I am flexible enough to say I don't want to wait, I've waited long enough. You all have taken me through the process of understanding what I can afford, understanding, going to my lender and finding out what I qualify for. Now, y'all, there has been, the conversation has been about buying a house. What is the difference, Carlos and Ron, between purchasing a house and building a house?
Want to take this first, Ron, or you want me to go?
Well, I think it's more up your alley. I mean, I can say that I can find a piece of land for a would-be purchaser, land in an area that they would be happy with and within the budget that they're capable of paying for. But in terms of buying a house or versus building, there are architect's fees, there's town planning applications, there's negotiating for what is called, I think, bridging finance, which would cover you, and you draw down on that at each stage as you go through the building process. And then you also would have, once you get that bridging finance, you would also have hopefully secured a mortgage at the end of the day to transfer the bridging into a mortgage, which is more long term. The bridging is usually plus or minus a year, depending on the length of the project.
Right.
But then the long term financing, or the mortgage, as it's referred to, for the 20 or 30 years that you have negotiated, that is more of the long term, and that is usually also at a more attractive rate. Carlos, this is your field, but that is usually a more attractive rate than the bridging is usually a little more expensive. Yeah. So with that, I will hand you over to Carlos.
Right. I was just saying, Ron, you could come and work with me, man. You have it down pat. So, so in terms of what to decide if you want to build or if you want to buy, there are a number of things that you have to consider. So some people need customized homes. It may be a disability, or it might just be a preference. I'm a pianist. I need a large piano in my front house, so I need a large living room. Certain customizations you would need to build, because if you buy a house, the house is as is, and then you have to do renovations to it. Okay, so if you are very specific in terms of customizations, then you probably need to build. In terms of maintenance is a lot lower on a recently constructed house. So if you build a house, the maintenance cost obviously would be a lot less versus a constructed house, a house that you're purchasing. Because it's there, the usual wear and tear, there might be things that you may need to upgrade, things that you might need to repair. So the maintenance costs are a little higher with houses that you purchase. In terms of buying, as you know, as technology improves, you purchase a house, the appliances also improve too. So with houses that are recently constructed, you have lower energy costs, so lower light bills, and right, some newness too. People just prefer a newer house, but that's not to discount houses that you purchase. To be honest, when you are constructing, it usually takes about 6 to 7 months. And I may be getting married. I need a house that a turnkey, a house that I can go directly in, and I would want to purchase a house. That's exactly what happened with me. I really wanted a house immediately, so that's what I did when we got married. We purchased a house, and we are quite happy with the house that we purchased. So, so it's a lot faster when you purchase a house. In terms of the price, now you can negotiate a price down when you're purchasing. Once you have a good agent, maybe like Ron, versus construction, there's a lot of hidden costs that you might not consider, so the price might even go up higher than you would have budgeted. And speaking of hidden costs, sometimes you might see a dollar sign, a dollar tag on a price, on an item up the top. But sometimes you don't necessarily consider all the costs that you come to top, but it has to be installed. The price, the labor costs associated with that are costs that you might not consider and that you'd have to budget for. So things like that you'd have to consider. And construction sometimes can be seen as a little more stressful I'm dealing with the contractor, dealing with the builders versus a purchase. You literally just go and negotiate the price. Once it's agreed, you get the mortgage, you turn the key, and go into your nice home. So there are pros and cons on either side, and it's really based on preference and finance.
Okay. So you said it's based on preference and finance. So the finance side of it. So you qualified me for, let's say, $500,000. So in this decision to build or to purchase, do I max out that $500,000 or do I leave room for contingency? Because you want to get everything that you've desired and you want everything in that home. So do I take my full amount there?
So Lisa, let me say, I have $500 in my bank account and I need a new fridge. Do I spend all to buy that new fridge with all of my $500, or do I try to find something that fits what I want, but I can still save some money at the end of it?
Well, Carlos, I didn't want to be a fridge lover. I do understand where you're coming from. You always say a little bit, as Brandon says, to put back a little bit for a rainy day.
Exactly, which is why I mentioned budgeting before. So you just try to you budget. So we will qualify you on your maximum, yes. So you can take the maximum if you need, but if you don't need, you stick with the budget, something that is manageable for you, and you go on the purchase on a basis. So the answer to your question really is yes, you will be qualified for a higher amount in some circumstances, but you don't have to take the maximum. You can always take a lesser amount and something that is manageable, because as I said, is a long-term debt, something you have to be paying for the next 10 to 15 to 30 years. So you want to get a debt load that is manageable. Okay. Yeah, you wanted to say something, Ron?
Oh, I was going to say that when people come to me and they tell me that they can borrow $500,000, I usually will ask them, do you want to borrow up to your max, or would you prefer to be maybe a little less maxed out, I would say, or would you prefer to buy something a little less? Generally people with a $500,000 budget want to see houses between 6 and 7. And if I know or think that we have a property that is negotiable, I am happy to show them. But I find it that many times it causes frustration to a would-be purchaser when they, as we say in Barbados, try to stretch the hand higher than than they can put.
Yeah.
Lisa aspires to have $1 million house.
It's true.
And I'm sure she can well afford $1 million or more.
Oh,
for the average man and for the average person or would-be buyer, consumer, I think it is good to stay within a particular budget, particularly if you've been given guidance by your bank. If you have been as transparent as we would want you to be with your banker and given them all your income and expenses, and they've given you what they consider to be your budget, I think it is sensible to try to find something within that budget or maybe slightly under. You don't have to, if you can borrow 500, doesn't mean you look for a house for 250, because you'll never be happy with that 250.
Right.
But you could look maybe for something between 450 and 480. At least there's a little room, because you go in the house, inevitably within a year or two, you or the husband or the wife or the boyfriend or girlfriend, whoever it is, are going to want to change a countertop or a kitchen cabinet or a bathroom tile or something. So you still have the ability to raise another $5,000 or $10,000 to make yourself more comfortable, to upgrade little bits and pieces that you're not quite so happy with. So it's always good to work within a budget. Some people have extra income from investments, from inheritance, from whatever source that they may be able to have. I think it's called disbursable income. I'm not sure what it's called. People refer to it in whatever suits them at that time of the day, but it's smart to work within what you can afford, so that you avoid.
I don't want. So this
So
$500,
that you avoid discomfort and then sometimes a little bit of embarrassment.
Okay, agree.
But what I also wanted to add though, Ron is correct. While we qualify you for the maximum, you don't have to take it. Just you would get something based on your budget and something that makes you comfortable, because sometimes you have shocks in life and you really want that extra disposable income that could be able to help you in the event of a shock that you might not have considered, never envisaged, that you might need to fund or satisfy.
Okay. So you've told me that I can qualify for the 500,000. I am still trying to figure out whether to build or to buy. And you've explained the difference in terms of physically purchasing or building. But in terms of the financing side of it, how is it different in banking, Carlos? How do I go through that?
All right, so I'll just go through what you need to bring in, and then I'll just give you the process in each situation, right? So the demographic information we would need, confirmation of your income. So as I said, if you're a substantive job, you bring a job letter, 2 recent pay slips. If it is that you have passive income, you bring in the rental agreement, you bring in confirmation of the dividends that you receive, whatever other income that you receive, you bring that in to confirm your income. You can also bring in, then we need confirmation of your debt. So this will be statements from your existing lenders just to confirm the balance and the payment. That helps the officer to be able to calculate your debt service ratio, which is what we would have mentioned before, right? We need proof of address and a copy of your Barbados ID. So that's the demographic information. So I hope you have your pens. Just go through it one more time. Confirmation of your income, which would be job letter, payslip, any other type of passive income. Confirmation of your debt, which would be from your existing lending institutions that confirms your balance and your payment. Proof of address, proof of ID. All right, so in the first scenario, if you are purchasing, so this is land or a mortgage, we need 2 main things really. Something that confirms the purchase price. So this would be a letter from said agent like Ron, or it might be a letter from a vendor if you're dealing with the vendor directly. And we need a confirmation from a valuer, that confirms the value of the property. The valuer is third party, independent of the purchaser, independent of the bank, independent of the vendor, and they, based on their expertise, would estimate the current market value of the property. I mean, and that protects the borrower and it also protects the lender, because we need to ensure that the value of the property is sufficient to cover the amount that you're borrowing. And it also protects you because you want to ensure that the price that you are being offered the property at is a reasonable price for the value of the house that you're getting. So if you do a valuation and it is substantially lower than what you're offering in terms of a price, it means that you're paying a premium for the property and you might want to speak to your agent to negotiate on your behalf for a lower price, right? If you're constructing now, you need to, obviously you would go and you would get different quotes. We encourage persons to get about 3 different quotes from contractors, and the contractors give you the quote. And once you have the quote, we then get said valuer to confirm the price that the contractor is giving you is a reasonable cost to construct the property that you would have, that it would have been drawn, that you would have gone drawn by the architect. So you would need the estimate from the contractor. You would need the valuer's estimate to confirm the construction costs. And then we'll be able to use that to determine the amount that you would need for the mortgage. Now, in terms of purchasing or constructing, Republic Bank offers 100% mortgages. That is fantastic from the point of view where if you have savings, you don't necessarily need to use the savings to put into the house. If you have excess savings, you can. As I said, you don't need to borrow what you don't need. So if it is that you can put in a lump sum amount, you can put that in first and the bank then finances the residual and part of the project to bring the property to completion. But if you don't necessarily have the savings, Republic Bank offers 100% mortgages. So with the 100% mortgage, there's a small premium that's paid directly to the insurance company that secures the mortgage, right? So with our 100% mortgages, we don't ask for life insurance, which is a fantastic part of the 100% mortgage. You don't have to get life insurance. We do encourage you to get life insurance because It helps in terms of your estate planning, so that if you or a partner dies, that the life insurance will repay the loan, and then your children or whoever the surviving party is will still have use of the property without any undue hardship. We do encourage it, but it's not required. So even if you do have it, you don't have to assign it to the bank or anything like that. So that is a fantastic part of the 100% mortgages. As I said, the mortgage is secured. So in the event of default, you know, something happens and you do have to part ways with the property and the bank has to sell it, the insurance kicks in at that point in time, right? So that is in relation to the 100% mortgages. In terms of drawing down on the facility, between purchase and construction. Now, if you're purchasing a property, Ron would confirm, if you're purchasing a property, usually to secure the sale, you have to pay 10%. So the bank would disburse the 10% towards the purchase price, and then the legal work is completed. After the legal work is completed, then we would pay the residual 90%, which would close the sale. Construction is a bit different, because construction is usually done in stages. In the very simplest term, a construction project can be divided into 3 stages. So foundation, ring beam, roof. If it is that you do need to, so when the project is divided into those 3 phases, we disburse in three separate amounts. And during the bridging stage, as Ron would have called it, you just pay interest on the loan. So some people are still renting while they are trying to construct. We're not trying to put you under any undue hardship. So during the construction phase, you only pay interest on what is drawn. So you don't have to pay the full mortgage payment. So by the time the construction is ended, that money that you pay towards the rent then can be redirected to the mortgage payment, and everything flows. So during the construction phase, you pay interest only. So it's $100,000 house that you're constructing. It costs $20,000 for the foundation, and that takes about 2 months. For those 2 months, you pay interest only on the $20,000 that is drawn. In month 3, you need another disbursement to commence the external walls and go up to the ring beam. That's another $50,000. After, for month 3 to month 4, you'll be paying interest on the $70,000 that is drawn. And then to complete the roof in month 5, we will do the subsequent disbursement. So you pay interest on the full amount, but so obviously the interest that you're paying increases as time progresses. But by then, while you pay more money, the property will be substantially completed. And as I said, when the property is completed, you can redirect the rental expense into the mortgage payment. So that's the difference between purchasing and constructing and what it means from the bank. So in terms of what the process is once all the information is submitted, it usually takes about 3 to 5 business days to get the loan approved. I can't speak to what the other banks do. I can only speak to what happens at Republic Bank, and we really pride ourselves in fast turnaround, which is 3 to 5 business days. After you have the approval, we give you a commitment letter. A commitment letter is our indicative offer, which specifies our terms and conditions in relation to the facility. Obviously, you take that away, you have a discussion with your partner or your attorney, and you could always ask us any questions that you have, and we'd be happy to explain it, right? After the commitment letter is executed, we then give them to the attorneys. You can have your own attorney, or you can use the bank's attorney. If we share attorneys, obviously it reduces costs, but again, it's not necessary. You can have your own attorney separate and distinct from the bank. And they prepare the legal work. So the legal process then is probably where the delay comes. Hope I don't have any attorneys on here, but that's not in relation to the attorneys, but there might be challenges that they might experience. Sometimes the person that owned the land before can't find the title deeds, and then title deeds have to be restored. There are a lot of challenges that can come up while in the process of the legal work when the attorneys do their searches. So that can be as short as 4 weeks to up to 6 or 7 months, depending on any challenges that the attorneys encounter. After the legal work is completed, then we get to the disbursement stage, which is what I was talking about before. With the purchase, we will do the 10% to secure the sale when the sale agreement is signed, and the residual 90% to finalize the process. If it is that you're injecting, you would put in the 10% in cash, and the residual that has to be paid will come from the bank. If it is a construction, after the legal work is completed, we will then engage you and the contractor to proceed with the disbursements. So you would get the first drawdown to probably, as I said, do foundation, then bring beam, and then roof. So it really is, once there's a communication, it can be a seamless process, and it can be fairly quick. And any contractor that doesn't have any delays and stuff, as I said, the construction projects usually take about 6 or 7 months, but there might be some challenges during the construction phase too. And if there are challenges, those things you need to communicate with your lender. Because, say for example, the contractor starts to dig, and he's taking too far to find rock. Those additional costs because it's additional excavation. Those are things you need to communicate to your lender so that we can then determine if you can qualify for more to be able to fund the shortfall, if the money has to become out of cash resources, whatever the challenges. But that's why we said you need to be transparent. You need to be upfront with the lender so that we can advise you accordingly to avoid any unforeseen delay.
Okay, great. So you've just taken me through the whole mortgage process, but I've decided now that I am going to build. So how do I find, or how do I choose a lender? Why should I choose Republic Bank?
Well, I mean, Republic Bank, I don't want to seem biased, but it would be the best institution to get the mortgage from, because we know what we know what Barbadians need. Remember, Republic Bank has its origins from the BNB days, which was an indigenous bank to Barbados, and we'll be able to help you accordingly. But apart from the know-how and the technical knowledge in relation to mortgages, we also have the lowest rates on the market. You can get a mortgage right now in Barbados for 3.5%, which is a fantastic rate, a rate that's even lower than staff rate. And you'll be able to get a fantastic rate on mortgages. Mortgages go up to, as I said, Republic Bank does 100% mortgages. A lot of the other financial institutions do not do 100% mortgages and ask you to do an injection, and you might not have the cash resources to do that. And then that prevents you from being able to get the house that you might desperately need. So Republic Bank helps you with our 100% mortgages. Apart from the fantastic rates and the fact that we do 100% mortgages, Republic Bank, as I said, offers fantastic turnaround time. And we also pride ourselves in exceptional service. So those are 4 main reasons why you should select Republic Bank if you want a mortgage. If you want a land loan, our land loans go up to 20 years, and the rate on that is 4.6%, which is also a fantastic rate. Again, you will not be able to find better rates than this at any of the other institutions in Barbados. So 4.6% is the lowest rate right now that you can get on land loans. It's 20 years. So say a year, 2 years in, you're paying the land loan and you are to the point, you got married, or you're to the point where you feel financially stable that you want to go ahead with the mortgage, you can then refinance that and you can get the mortgage, we will pay out the land loan and give you the full-on mortgage, right? And as I said, it's at a lower rate. Apart from mortgages, yeah, go ahead, Ron.
I just wanted to ask, which I think would be very interesting for whoever's watching this presentation. Could you also tell us the age up to when a person is able to borrow? So if I am, 40 or 50 years old, how much more borrowing time do I have? Do you have a cutoff date at 60 or 65 or 67?
Right. So retirement in Barbados right now is 67. So the mortgage will go up to your retirement age. And let me tell you the reason why. After you retire, you get approximately 40% of what you work for now, unless you have some other type of income in place, like a retirement savings plan. So you wouldn't want to extend a mortgage into your retirement. When you retire, you just want to cruise, go out and fly anywhere, just relax and not be paying any extra debt. So we do our loans up to age 67, or up to age 67. But as I said, for the 100% mortgages, those are 30 years. So say, for example, you are 30 now, and that would take you to age 60. So your loan will be repaid before retirement. If you're doing an injection or it's not 100% mortgage, then we can do up to 35 years or to age 67, whichever is lower.
Okay, thanks. I thought a lot of people ask us that question, and I knew that for myself, but I thought it would be important for you to say that. to say that as well. Sorry.
I know
Thank you.
some of the other banks, institutions have an earlier age, but our Republic Bank, we take you to age 67, which is the time when you would usually retire. So I was mentioning you have the mortgage, you have land loans. Now, Republic Bank has a fantastic product right now, our renewable energy loans. Those are standalone facilities. Now, let me explain to you what I mean by standalone. It means that the income that you are getting from the PV panels that you will install on the house would be sufficient to cover the loan payment. So it doesn't go towards your debt service ratio that we were talking about earlier. So essentially what it is you will speak to a vendor. They would speak with you in terms of what can be installed on the roof of your home. You'll be able to generate income from those PV panels. Now you have really two options. You can either install PV panels that would be sufficient to cover just the loan payment and the bill. Some people might do PV panels just to cover the loan payment, and some people might do the PV panels and cover the entire roof, so you're generating enough revenue to be able to cover the bill, the loan, cover the utility bill, and still have extra money in your pocket that you can do other things with. So you would obviously negotiate that with the vendor when you are looking at it. But as I said, Republic Bank offers those loans, the 100% financing for those standalone renewable energy loans, up to 15 years to repay, and the rates are extremely low, uncomparable with mortgage rates. So those are mortgages, those are land loans, and renewable energy loans. Now, our consumer loans, you might be constructing, or for whatever, you might need extra income, or maybe you might need money for furniture. Right now, Republic Bank is offering a loan where you can get up to $50,000 unsecured. $50,000. It's making my head hurt because it's so fantastic. And the rates are low, the payments are manageable. As I said, fast turnaround, and they're flexible repayment terms. So a $50,000 loan that you can get at Republic Bank, hassle-free. You can also get the renewable energy loans, as I said, up to 15 years to repay, extremely low rate. You can get the land loans up to 10 years to 20 years to repay, extremely low rates at 4.6%. And then mortgages at 3.5% up to 30 or 35 years, and our retirement, whichever is.
Great. So we have had our panel discussion, and we have some questions in the chat box that our admin and our moderators have been trying to answer. But one that jumps out at me is a question being asked: what is held as security? Is it the land and the projected price of the house? So you might need to expand a little with the mortgage.
So as I said, after you have you're constructing, after you have the estimate from the contractor, a valuer has to certify those estimates, right? So in the certification by the valuer estimates a projected market value. So while the property is not there as yet, the funding from the bank will be able to help you to realize the market value on the property. So the property itself, which will be the land, and the property to be constructed will be the security for the loan. So I have a piece of land, it is worth $8,000. I will purchase that, and the property construction is $300,000. So the construction cost plus the purchase price in a simple thing, $380,000 would be the estimated market value of the property. Obviously, the valuer has other things that will go into there: sale prices on the market, the environment, the location of the property, which would probably cause the market value to be a little higher than the construction cost of the property and the land value. But
we'll wait on you.
but but the estimated market value is really what is used as the security for the loan.
Right.
Give me 1 second.
So we have another question. Can I bring over my mortgage or my land loan to Republic Bank?
So right now, Republic Bank has a campaign going on. It ends on December 31st. So it's imperative that you get your application in right now. The campaign that is going on right now is that if you have an existing mortgage or additional at another financial institution, we will absorb the legal fees and the fees associated with converting your mortgage to Republic Bank up to 2.5% of that mortgage amount, or up to $30,000, whichever is lower. So I have a mortgage, it is at some other bank, and I want to get the lower interest rate that Republic Bank is offering. Just need to bring in the information I would have mentioned. You need to get a valuation on the property. We would absorb those costs. You get the valuation of the property and bring in the information, your demographic information, to ensure that you will qualify. We will take over that mortgage and pay the legal fees. I mean, it's really a no-brainer. There's nothing really that will stop you from doing it, because you would save so much money by getting a lower interest rate on a monthly basis from your disposable income. So it is, and Barbadians are getting very rate conscious. So gone are the times when people stick with a financial institution because you know that's where my mother banked or anything like that. You get something that is helping you in your pocket, and Republic Bank is helping all of you to do that. So as I said, you can just speak with any one of our loans officers in any of our 7 conveniently located branches. Just go to them, tell them that you are interested in bringing over your mortgage to Republic Bank. We will commission the valuation to ensure that the value is sufficient to cover the amount that you have borrowed. If it is that you need extra money because there's equity in the property, we can give you that additional money too. So you don't only need to get the amount that you have at the existing institution. You can get additional funds to help you at Christmas, to help you with whatever you have going on, and then the bank will take over that loan and we'll be able to help you at fantastic rate.
Okay, so another question is, do you provide financing if you want to buy a foreclosed property or an investment property?
Yes, so 2 separate things. So if it is a foreclosed property, foreclosure, we would obviously still have to put in a bid. And if the bid, so when you write Ron or whoever is selling the property, the agent is selling the property on behalf of the financial institution, once the bid that you put in is agreed, they will give you something in writing, and then it would just operate like a normal purchase. You would give the price. We would be able to let you know that we can, based on your qualifying amount, we will let you know if you'll be able to purchase the property. What I failed to mention is that Republic Bank also fund wooden properties. So if it is that you choose not to build a wall structure, you can build a wooden property. Our capital mortgages, which are for wooden properties, go up to 20 years. If it is that it is an existing wooden house, we need to consider how long the property was constructed, because as you would appreciate, wooden properties have an estimated useful life. So if it has been constructed for 10 years without any significant repairs to that property, obviously that would have to be included in the amount that you're borrowing in terms of moving forward with a mortgage for a chattel property.
Okay. Another question is, you mentioned the interest rate, the mortgage interest rate of 3.5%, and how long is that applicable for? How long is it?
So the rates right now at Republic Bank are fixed for 3 years. Now, I don't know if I speak correctly, but I don't think any of the other guys offer fixed period for that long. And it's really long because with mortgage, you tend not to have a fixed period on a mortgage because it's a long-term debt and you're fixing the period because you don't know what would happen, right? So usually, some of the other guys would fix the rate at about 1 year, 1.5 years. Republic Bank is going up to 3 years. And again, I don't think you can get better than that. So the fixed period for the interest rates on the loans are 3 years.
Great. Okay, so at this point, I would ask both Ron and Carlos if you have any other comments, closing comments that you would like to make. Ron, we'll start with you.
I would like to say that, firstly, thanks for inviting me to this useful seminar or presentation. I wish that Stephen was here because he's a wealth of knowledge as well within the bank, with his experience and know-how. I'm sure it would be difficult to add to what our good friend Carlos has given us, but Stephen also would have been a valuable asset at this meeting. You know, if there are any questions that you all have that I can help with, I'm here and I'm very pleased during our presentation or anytime thereafter. The other thing I would like to say, particularly to you, Lisa, is that when Carlos gives you guidance as to your borrowing power, I'd be very pleased to hear from you. And whatever little expertise I have, I'd be glad to pass on.
Great, no problem.
Thank you.
Thank you, Ron. So in my closing comments, I just wanted to highlight Republic Bank, we're the one for you. We have 7 conveniently located branches. You can see I'm at the Warrens branch, but there's the Spikestown branch, the Lime Grove branch, the Wildy branch, the Worthing branch, the Broad Street branch, and the Six Roads branch, in addition to Warren. So there's 7 locations across Barbados. So there's no excuse that you cannot get in touch with someone at Republic Bank in order to get your mortgage. Apart from our branches, as I mentioned before, you can always contact us on Skype. Our Skype handle is republicloans.bb. You could always get us on Facebook too. It is Republic Barbados on Facebook. Our trunk line is 227-2700. And those are just the mediums that you can get in contact with Republic Bank. You could always email the applications, as I said. You don't necessarily have to come into a location. Once you email info@republicbarbados.com, somebody will be able to contact you, either call you or send you an email on the steps forward, and be able to help you with your financial goal. Republic Bank, as I said, has the lowest rates on the market, 3.5% for mortgages, 4.6% for land loans, $50,000 for consumer loans, and 100% financing for renewable energy loans. I mean, it's a no-brainer. Republic Bank, really one.
Awesome. So we just want to say thank you to all of our attendees, and thank you to Ron, thank you to Carlos. We do apologize for Stephen not being able to be on this morning. He has some technical difficulties, but he was participating in the chat. If you had a chance to place anything in the chat, he was answering from there as well. And I just want to say thank you once again for attending our webinar. If you have any more information, you can, as Carlos said, you can send it to info@republicbarbados.com. You can give us a call at 227-2700. You can visit our website at republicbarbados.com. Anyone who would have received an email from the webinar will receive a closing email with the recording. We do thank you once again. Have a great day.
Thank you. Have a great day.
Thank you. Thank you.